Welcome to the Libertarian Counterpoint. I'm Richard Field. On the program today, we have Elaine Lucier, the Vice President of Young Americans for Liberty at the UC Davis campus. And we have John Cameron, who is the author of Rewire and Re-Kill, among other talents. And moving into the topics for the day, we just last week, the Fed chickened out on another rate increase. Anybody have any? You're an economics major. Why did Janet Yellen chicken out?
That is a very good question. In what I've learned with different kinds of what the Fed can do in talking about like investments and or the amount of spending that the American public does with you kind of manipulating the interest rate. Why that would be increased? I think it's to really make people afraid of borrowing. I think at this point would be my best guess, to make people afraid of borrowing if they're increasing the interest rate, but make people hopefully on a more individual level save as well. So I think that's very. I can't say that I can speak to that to the best of my ability. I'm sorry.
I would hazard a guess that that the cost of printing money would go up. They have to.
You're talking about the printing presses?
Well, no, the fact that what are we, 20 trillion now?
Well, 20 trillion in debt,
and
yeah,
the interest
19
on, you remember, and you have read in history books, when Jimmy Carter tried to inflate his way out of a huge deficit, and interest rates went through the roof, and basically the economy, the head of the Fed at that time said, "Oh, okay. Well, I'll just put a stop to that," and started ratcheting interest rates up. Well, now, what was the deficit at that time? Probably less than a trillion.
Probably,
yeah, maybe a trillion. So even with interest rates of 20%, you're looking at 200 million.
A manageable debt interest cost.
But now 7 or 20 trillion.
19, but yeah.
19 trillion. Well, round up to 20. Even if interest rates are at 2%, 3%. I mean, that's...
Well, okay, I mean, we're looking at an economy where approximately 65% of the spending in the federal spending goes to what is called the non-negotiable part of the budget.
Entitlements.
Entitlements, yeah. The Social Security, Medicare, Medicaid, interest on the debt, and that's about it. That's 65% of federal spending. The other 35% encompasses military and all of the three-letter agencies and Secret Service and all that sort of thing.
Well, I know where you could say 35% right there.
The taxes that we take in just barely cover the mandatory spending.
Right.
Just barely.
Right.
And that's probably wouldn't happen if interest rates went up to a normal 3, 4, 5% level, because the interest cost right there would throw it all out of whack. But the interesting thing is, I mean, this didn't start with Janet Yellen or with Ben Bernanke or even with Alan Greenspan. This started back, really, you could say back in 1913 with the advent of the Federal Reserve System, which separated, in a sense, monetary policy from the gold standard, although there was still a nominal gold standard. But Nixon took us off the gold standard entirely back in 1972, and ever since that time, it's been a fiat money standard, which means there is no standard basis for what money is. And so the federal banks, the Federal Reserve System, central banks in Europe, central bank in Japan, all the world's central banks basically make it up as they go along. And what they've been making up is, in line with monetarist and Keynesian theory, is they make up a scenario where, well, if the economy starts to slow down, we need to goose it with lower interest rates and making more money available to borrow. And they've been doing that really since 1913 and in earnest since the Vietnam War, since the 70s, so that we have this huge deficit at this point. And it's not just a federal deficit, it's also a business sector that's much more in debt than it was 30, 40 years ago. It's a consumer sector that's much more in debt 30, 40 years ago, particularly college students who are way in debt.
$1 trillion in debt?
Car loans are now 72 months instead of 3 years, or cash. House loans are, at all-time low interest rates. Again, trying to repeat the housing crisis. We're in a situation where the economy has been goosed with loose money to a point where you really can't solve a problem of too much debt with more debt.
I don't know, Richard.
That's the problem. And Yellen is between a rock and a hard place. She's already at zero with interest rates, or 0.25%.
There are negative numbers.
And we've been in a so-called recovery since 2009, which is one of the longest recoveries on record. That's 7 years. That's long for an economic recovery.
So-called.
So-called, yeah. Well, we're 2% unemployment, or 5% unemployment, 2% inflation. It's it's pretty close to what it's a weak recovery, but it is in fact a recovery. We're not as bad off now as we were back in 2008. Quite, almost, but not quite. So, with a recession looming and everybody being afraid there's going to be a recession, back in December, she said, well, we need to get interest rates up a little bit so we have some ammunition so that we can lower them when the recession comes. And so she started talking about 4 interest rate increases in 2016. Did the first one in January. The stock market tanked. I mean, it went to hell in a handbasket. And it didn't turn around again until they started talking soft and talking easy about not doing it in March. And of course, they didn't do it in March. Now they'll probably do it in June. And in September, they probably won't, because it's at the height of the political season. So I don't know where they go when the recession actually does get here.
Well, were you going to?
Oh, no, but on an earlier note, what you were saying, I think it's really it's always something of interest that I point out to people when I do kind of look at like the breakdown of government spending and like how that factors into GDP and boosting that part of the equation for GDP, and kind of making that look like we're healthier than we are, but going into looking at how much we spend on what you said, the kind of the entitlements versus military spending, I think there's a misconception on a young level that that most of our budget goes to military spending when it's just not the case. And I think that's something that is a narrative that's been perpetuated for a long time, just because there's been so much backlash.
Well, what happens is people say that the majority of discretionary spending is spent on the military, and that's true. But that word discretionary spending hides all of the mandatory spending, which is 2/3.
Hides the indiscretionary spending,
yeah,
which is
really
problem.
Discretionary.
Yeah.
Right.
I mean, Congress has just as much discretion to change Social Security, Medicare, and Medicaid as it does anything else. They just don't want to. Third rail of politics and all that.
Well, they don't want to face the consequences, which would be that they wouldn't be elected. And politics, the actual definition of politics, which is why every time there's an election, I'm so amused by people expecting their political folks to actually do what they say, is basically getting power for the group that you represent. That's what politics is all about. And so what's interesting to me when you talk about how low can they go and how long can they keep it, I'm starting to see a number of news stories. I didn't print any out about the fact that if a country controls its own currency, like the Swiss or like U.S. or like China, then it doesn't really matter how big the deficit is, because they can just print more money.
And that's exactly what the next phase will probably be. We've had quantitative easing, which is just increasing the amount of money to be available to be borrowed. But now, I think probably the next step is going to be pure monetization, sort of like what Japan has done. Japan has one of the biggest bond markets in the world, but there's only one buyer for Japanese bonds, and that is the central bank, Japanese central bank. Japanese central bank buys all of the bonds. For all, I mean, if they get out of the market, trading stops. And so the government of Japan has been running, 30-40% deficits, huge deficits for the last 20 or 30 years, trying to turn around the long-term depression or recession that they've been in unsuccessfully, because again, they're trying to fix debt with more debt. But at the
And they have
national level.
They have the heaviest chunk of aged population of any
Well, their
civilized
demographics are
country.
terrible as
The
well.
demographics are terrible.
Right.
They have basically zero population growth. So in essence, as these people start dying off, they're going to have a shrinking population. So the tax, I know the tax basis actually probably isn't going to change because the aged aren't paying any taxes. They're receiving, transfer payments basically. But the fact that the news wires are starting to do the propaganda job for the government and talk about, the new economic theory really needs to take hold here, and that is this. And years ago we would have laughed at this, but as long as you control all your debt and you can print money, then it doesn't really matter how big your deficit is. But our debt, I think we're the biggest holders of it, but a lot of foreign countries are as well. And if they choose not to hold their debt, then what do we do?
Well,
Buy it all? Be Japan.
Yeah, the Federal Reserve will buy it. I mean, that's the end game. Well, part of the end game. The other part of the end game is if you can't lower interest rates, you just go negative. That's what Europe has done. Mario Draghi is going negative on
Japan
euro rates. Japan has gone negative on their interest rates. And Janet Yellen is saying, that's a policy option. We might consider doing that. And there are people like, I think Krugman, people like that are saying what a great idea. Now, economics major, what happens with negative interest rates? Has that ever been tried anywhere before with any degree of success for any degree of, amount of time, any significant amount of time doing it?
Not that I can think of necessarily.
I mean, negative rates, that's where you pay people money ostensibly to store your money, but not really because they're going to lend it out. So you pay people to lend your money to somebody else, as opposed to be paid for lending money to them. That's what they're talking about and doing in Japan and Europe. I mean, is the world upside down or am I upside down?
Again, I can't really speak to that. I think it's above my level of expertise. I'm at 19. I haven't gotten into that with only.
You haven't taken your money in banking course yet.
No, not yet.
Well, I would. It's beyond my comprehension. I can't conceive of a world. Well, I understand why they, from a political power perspective, have to do it. But what they're in effect doing is rewarding spending and borrowing and punishing savings.
Well, yeah.
Which is what has really. I remember at one time I worked as in institutional investing, and I sold large certificates of deposit to other institutional investors. And people could pretty much, if they saw 4, 5, 6%, CD. 7% maybe if it went out 10 years or something like that. And people kind of plan their lives around getting a certain rate of return on the money that they scrimped and saved to put away.
Sure.
And that's why you see a lot of people in their 60s and 70s who actually planned their retirement pretty well.
And now they're Walmart
working, they're greeting at Walmart, they're working behind the counter at weird shifts at all these little hotels that house government employees when they travel from one place to another for what reason I don't know. And so, these people did what they were told to do and what their parents had done and what makes logical sense, which is don't spend more than you make and put away a certain amount, and somebody will pay you because they're going to take that money and in return lend it to someone who's not as thrifty as you are, or maybe who has an opportunity to grow a business, or they want a home.
Okay.
And so they've turned the equation upside down, and it's completely and totally about power. And I don't see how they're going to get off this free or less than free money train unless there's a total economic collapse.
Well, but the other problem, of course, that they're anticipating, you have to give them credit for anticipating the problem, which is if the rates are negative, why should I put any of my money in the bank? I'll put it under the mattress, or I'll bury it in the backyard, or I'll buy. In fact, there's a run on safes in Japan right now. People are, they're sold out, flat sold out of home safes. So now they're talking about making cash inconvenient. In fact, in Sweden, cash has almost been eliminated entirely. In Europe, they're talking about getting, or maybe they've already gotten rid of the 500 euro note. There have been articles by the former Secretary of the Treasury, the guy from Harvard whose name I can't bring to mind right now, Larry something or another, who's wrote an article about getting rid of the $100 bill, ostensibly because it's used in terrorism or crime or something or another, but really to prevent people from burying their, taking their money out of the banks. In other words, forcing money into a zero interest rate digital way of holding their money.
And also, when it's buried in your mattress, they can't figure out where to take it.
Yeah,
they can't figure out how to confiscate it.
Yeah,
They don't know where it is.
Much more difficult to have a Cyprus-style bail-in when the bank fails, that kind of thing. Yeah.
Well, what about? So, would you take that to the next step and think that, in the interests of the nice thing about terrorism is that you can make anything a terror threat. So, this cash makes it impossible for us to track terrorists because they can just pay for things with a suitcase full of cash. Therefore, we're going to eliminate cash. Well, wait, now they can use gold because we can't track gold. So do you think gold would be the next thing to be eliminated? Anything that has tangible wealth?
Yeah, I think that's a ways down the line.
It's been done before.
Yeah, FDR did it, and no question that it could be done. It would be very difficult because gold is a lot more dispersed now than it was during FDR's time. But, that's possible. But, then you've got Bitcoin and other kinds of cyber currency. I don't think that, there's no reason in the world why money should be monopolized by government. There have been times in the past when governments did not have a monopoly on money.
There is no reason, but the law as it's written
the legal
now
tender laws,
prevents anyone else from creating money.
Not necessarily. You can create, Bitcoin is, as far as I know, it's still legal, and people use it to transact accounts. I don't see any reason why the digital technological economy that we have can't stay ahead of the government in figuring out ways to settle accounts.
Well, I absolutely agree. And one of the things that the IRS and all other government agencies in the world hate is barter. And I think you have the ability with the computing power that is out there, the massive computing power and the algorithms that can be written to put a market price on anything. In other words, I'm very successful at web page design, and I have 45 successful web pages built. I want to barter my time for an equivalent in new Chevy. What's that worth? And I think before that playing field would be very hard to even, but I think now with the computing power that's out there that you could do it. So it's really, unless the U.S. government, European governments take the course of China and maintain firm hold on the cloud, I think you're right that the government's going to try to take control of cash and gold and all the rest of that. But this information society that we're in is going to empower us to completely avoid the government as far as money goes.
Yeah. In the meantime, we've got a very scary, volatile economic and stock market environment. Just in the last couple of weeks, Valeant Pharmaceuticals, that's the company that was famous for buying drugs and then immediately raising the price because they were still and getting a lot of publicity for doing so. They did a few other things that weren't exactly.
And rap songs. They buy rap songs as well. Oh. The owner of Valeant, the 30-something guy that.
No, that was a different company, I think. But
is it?
Yeah, that was a different company, but the same business model.
Ah, okay.
Anyway, Valeant failed to file its 10K, which is a big deal. You did some work in the securities industry. If you don't file your 10K, that eventually will trigger a bond default, and Valeant's got a whole heck of a lot of bonds out there. Junk bonds have been a kind of dicey part of the market for the last few months now. Is the fact that Valeant is in danger of triggering their bonds, the fact that its stock went down 50% in a day, is this the snowflake that starts an avalanche in junk bond defaults, which could create and transmogrify into the economic crash that we're all worried about.
I'm not as familiar with the junk bond market. You know, for the market went away for a while, but
It's back big time. It's back big time with the oil companies, with the exploration and development oil drillers, the shale drillers. They have financed most of the shale oil revolution with junk bonds, which is, junk is kind of a derogatory term. Basically, junk means anything rated BBB or less. Which is, maybe a CCC or less, I forget. But anyway,
I think you're right. It's below B, or it might be below CCC plus,
something like that. Anyway, whatever. Yeah. It's less than investment grade.
Yeah.
Bonds that can't very easily be held by, say, an insurance company or a bank or other organizations like that. Most of them get paid back historically, maybe 95%, but in the oil patch right now, there's a huge chunk of them. When oil was selling for $100, shale made sense. When oil is selling for $30 to $40, not so much. And those companies are starting to go bankrupt, and their bonds are starting to go south.
Well,
now we're seeing it happening in the pharmaceutical industry as well.
Well, I think is it the snowflake? I don't know. I think the big snowflake is going to be the next million people who default on their student loan payments and
car payments?
And well, you know,
they'll be forgiven anyway. So.
Well, Obama's talked about, you know, because he needs the young, you know, his folks, his brand of communists need the young votes to
free college
to learn enough to push the button in the voting booth. But that's it. And so I think you're right. I think they will. But you know, I was counseling a young man on how to. I won't tell anybody in the audience who's watching this how to we just transfer the, never mind, we won't talk about it. There are ways, anyway, to get around the supposedly unbankruptable student loan debt. But I think that's really the place. But also, you know, we've talked about fracking and the drillers a lot. You know, pharmaceutical business, unless you have major drugs online and a good-looking income statement and balance sheet, is a crapshoot anyway. And most pharmaceutical companies do what Valeant did, they just don't do it with junk, which is they find somebody who's got a great idea that they think has a high percentage chance of panning out after the hoops that our crazy FDA makes people jump through, and they buy it rather than, you know, doing their own research. And this is the way it works. So, you know, should they be defaulting all over the place? Probably. Is it going to happen anytime soon? I don't think so. So the short answer is I don't think anytime soon. I'd be worried more about student debt.
Are you worried about Apple? Is Apple going to lose its fight against the FBI and be forced into creating software to ostensibly open the phone of the San Bernardino killer, and in the meantime everybody else's iPhone?
No, go ahead.
I think they'd be hard pressed to do that with the current CEO coming out and, you know, writing to Apple product users specifically and saying that we're not willing to do this. That if they were to back out on that word and were to create something like that for the purposes of the FBI, I mean, it would set a completely different precedent. And I mean, I think if it were any other company than Apple, they wouldn't have the kind of weight behind them to say no. And I think that to the FBI, that they're not willing to create that kind of technology to kind of circumvent privacy law or anything of that nature. And other than that, I don't think that they'll do it. I genuinely hope not.
And on top of that, I agree with you. I don't think it's going to happen. And something has come to light recently. Apple is doing a wonderful, wonderful PR job on this. Mm-hmm. Every time the FBI says something remotely logical, the Apple legal people and their investigators, there's some smart people at Apple. Like the most recent thing was the FBI hasn't asked the NSA to help them get into this phone. And I'm pretty sure the NSA could probably get into that phone if they wanted to. And the FBI's response when asked, why don't they ask the NSA for help instead of asking Apple to crack the security, which is a big part of the reason people buy their products, is they said because we don't want to.
Well, and the other thing is, remember John McAfee? John McAfee that invented McAfee software and has had a checkered history since then.
Checkered is a understatement.
But he,
Dog killing, womanizing,
Yeah,
Viagra and
yeah,
Viber, and
yeah.
in well, I'm not saying there's
Belize,
well, there is
yeah.
something wrong with killing dogs.
Yeah, whatever. Anyway, he is on the lam from Belize right now, running for the Libertarian Party candidacy for president, which I don't think he's going to get. But he has said, "Hey, I invented McAfee. I'll open the iPhone. Just give it to me for half an hour, and I'll crack the code."
Yeah, nobody thinks that he can. I think he's
You think
left.
he's just- you think he's
he
just
left
blowing-
some of his marbles.
You
in
think
his
he's blowing smoke?
Last 20 years
Blowing
of,
more smoke than usual.
of smoking and injecting and sniffing and whatever else he's done. Yeah. No, Apple. You know, one of the reasons I have an iPhone is that I know if I say after 10 attempts wipe my phone, then after 10 attempts my phone's going to get wiped. I would, if that phone ever does get opened and they look at it, I will tell you that they're not going to find anything. There will be nothing there. And any real spy, a real spy doesn't use technology. They use stuff called tradecraft because you can't crack tradecraft. Tradecraft is one person whispering in another's ear, the second person memorizing it and going and doing it. And until you plant a chip in somebody's brain and read it,
Well, they do have directional microphones and
yeah,
such.
but you know, it's pretty easy to avoid those. And as the guy that released all that information said, all you got to do is put that phone in the refrigerator, and there's nobody in the world who can get at it, because it's a box of metal, you know. And as long as your phone sits there, they can't find you, they can't read it, they can't do anything. So there's some low tech ways to avoid all of this stuff, and low tech wins in the end.
Well, low tech is certainly has a lot more life than high tech, a lot more longevity. We said a little bit about the oil fracking thing and the fact that oil companies are in trouble. In the last week, 10 days, the price, or maybe 2 weeks, the price of oil has gone from the 30s up to the low 40s, which is real close to where some of the frackers say that they can actually break even, but not quite.
Now there are some that we talked about this again before, that
Some can, some can't.
some can, and as a matter of fact, every time the price goes down, they find a cheaper way to produce. And so this has been good to shake out the weak sisters, and if it stays around 40, they're going to make money in some places.
Okay, well, we'll see. That's the show for this week. We'll see you again next week on Libertarian Counterpoint on the air at Channel 17 Sacramento, cable channels all over the place, and on the web at www.accesssacramento.org, and of course on YouTube. Thank you very much, Elaine and John, for being part of the show.
Thank you.
Thank you very much for having me for one of the shows. And hopefully one more.
Yes.